Welcome to this week's edition of the Trading Bell. We're coming to you from the Nairobi Securities Exchange here in Westlands. And today on the show, we'll be hosting the Chief Executive Officer for Crown Paints, a company that is in the business of manufacturing paint. And we'll be speaking to Rakesh Rao, the Chief Executive Officer. And who really is Rakesh Rao? Well, here now is his profile. Rakesh Rao has been at the helm of Crown Paints Kenya Limited, the leading paint company in East Africa, as Chief Executive Officer since 2005. Rakesh won the Koya Awards for 2014. Rakesh has steered the company to an annual turnover of over $60 million and enjoys 65% market share. In 2014, he led the team to win overall Company of the Year, Productivity, Quality and Leadership Management Awards. Join me for the conversation. Thank you for joining us. Welcome to our show.
Pleasure to be here.
Please have a seat. Well, Rakesh, it is indeed interesting times for Kenya. Right now we know that there's talk of the government trying to push for housing. But really, let's reflect back to 2017. A lot of companies had a difficult year. What was the story for Crown Paints?
Okay, difficult year for us also. Somehow we could not able to grow, significantly, because we always target to grow by double digit. But overall, we could able to manage our, we were able to sustain the market shares. We didn't lost the market share. In fact, if you overall regionally, we have been consolidating our figures. I hope there will be some good reasonable growths.
All right.
So except the cash flow, which has been a big issue last year, because most of the government's projects got on hold, and none of builders could able to pay us because they could not able to sell. And there was a lot of unsold inventory was there in the market. So private developers and builders are also going through a very tough time. Plus elections, re-elections, so it was also a cash pressure from the government also. So overall, there was a little bit issue on the cash, but we did reasonably well last year. Yeah.
All right.
Yeah.
And looking at 2018, so far, how is business?
Business started well. January, February, I think we've seen some, the figures are doing well, and we can, like first 2 months, we can see there's some reasonable good growth. So we are very hopeful that voters' initiative and now political stability has also been there. So I think it's going to help us to settle our business, and I hope to do well this in 2018.
All right. And being a listed company, Rakesh, of course, it gives you an opportunity to raise fresh capital from the NSC. Are there any plans of tapping into some additional capital?
Not really, because our requirement is not such a big requirement at the moment. So whatever expansions we've been doing, and we've been extending and trying to add more value additions to our present facilities in Tanzania, Uganda, Rwanda. So I mean that capital is enough. We can able to manage with the bank. So its requirements is not very huge at the moment. So in case something comes, and we can look into that aspect also, but not now at the moment. Yeah.
Okay, so you remain open to more possibilities?
Yeah, in case comes, okay. But at the moment we don't think that we need anything at the moment, yes.
All right, and let's take the conversation forward, Rakesh. Looking at Kenya, there's a lot of optimism right now in the real estate sector with, like I said, the government has an ambitious plan to deliver affordable housing. And of course, in the construction industry, this is an opportunity for companies like yours to tap into the opportunities when it comes to selling paint. What do you see in the horizon, Rakesh?
No, I think any infrastructure developments, I think the first company benefit is a cement paint. So that's why we see that the movement of the paints at our counters and our customers is quite doing well in spite of the rain and all. But we can see the very, very positive trend compared to last year. Okay, we would like to tap all the opportunities for business opportunities which are going to come on our way. Definitely this the housing initiative, which is going to be a boom entire Kenyan economy, because always any growth of business country comes from the construction sectors, and at the moment the construction sectors, like you talk about last 7-8 years where it was growing by 18, 19, 22%. It went down to 6 to 7% in 2017. And last quarter was 7%. So if we can double to 17 to 14 to 15%, I can see there's great opportunity for a brand like us, because being a brand leaders, we have more than 60% market share. And we also would like to serve particular low housing sectors. And initially, we would like to launch few products. We just recently launched a product called Gao to cater this type of market also. So we do not want to like show customers or people that we only deal in premium brand, but now we would like to serve all type of customers, low end and high end, to make sure that brands make available to everyone. Yes.
And looking at the big picture, Rakesh, of course, there's a lot of plans in the pipeline to scale up housing. So how do you exactly tap into the opportunities, knowing that you have a huge footprint in Kenya, be it in Nairobi, the other major cities? How do you intend to tap into this?
I think we would like to have certain marketing strategies, and we have to make sure we have a major 2-3 action plan strategy this year. That the paint being used by our painters, so we have been connecting them. We have a special software programs which we are able to connect with them, be able to communicate with them. We're emphasizing a lot on training and giving the product knowledge to them. We are opening a lot of showrooms to communicate what is paint. Paint is just not like normal paints and wall paints. Now it become a lifestyle. So we are opening a lot of showrooms. We have more than 12 showrooms in Kenya, so people can go and see. We will also providing a lot of digital solutions to our clients on color schemes. Another area which we would like to be talking about and trying to initiate the process of women entrepreneurship programs, where we would like to identify few girls who have an interest in interior decorator, interior design and painting solutions. We would like to run a special programs for them to train them, and then they become brand ambassadors, and then make sure that each and every part of Kenya, some representatives from Crown is available to give a color advice, color schemes, and advice on texture finishes. So, I mean, we would like to go to detail, even all the county level, that people should have access to all type of paints which we are manufacturing. We keep on, innovating. We keep on launching new products. So all these products definitely bring all value proposition to the clients, and we've been focusing on offering more value-added services to clients.
All right. And looking at the construction industry, Rakesh, there's been a lot of competition as well for paint manufacturers. We know the likes of Basco Paints, Sadolin, entities that are in competition with your brand. And how do you intend to remain still the brand in the market when it comes to pricing, when it comes to product availability and distribution networks?
Okay, I mean, the competition is always healthy. Competition will be there. It's good for the customers. They have a lot of choice. But what we offer is a value-added services and value propositions to the client. We offer value for money. We offer services. We have a great supply chain. We have a great distribution channels. We work professionally. We've been spent so much money on training our people, training in supply chain, training in customer services. We have very special programs of training our customers, which has been run from US, Singapore and a US-based firm, where we focus a lot on professionalism. So, like for examples, our supply chain, if you see our certain KPIs, we work on 95, 90, 97%. Our supply chain is 90, 99%. So the propositions, value proposition which we offer and infrastructure which we have, I think other companies need a long time to do it. And being a listed company, been run by the professionals, we have a much added age compared to any of our brands. And that you can see in the market from the support from the customers end also.
All right.
Yeah.
Let's talk about the numbers really, Rakesh. Talk to us about the turnover you had and what are your growth plans for this year?
I think we always believe, I said, it's a double-digit growth. I think we have taken heavy stake this year to grow by at least more than 15%. And I hope that we will be able to do it, because last year what we lost, believe that it will going to come back to us. And when the rain showers also help us to paint industries, because when heavy showers comes, a lot of buildings being spoiled, and it affected the buildings inside because of seepage, waters and all. So we like expecting a very good year in 2018. Yeah.
Looking at prospects for 2018, of course, you did set up a plant in Kisumu, costing you about $5 million US. What do you foresee in terms of growing the sales for that region, as well as tapping into Uganda?
That market, we are very dominant players. We have more than 70% market share in that regions, and because of it's a huge territory. We talk about the Rift Valleys and Western Nyanja. I think area is quite huge. It's helped us to improve supply chain. We've been quicker to the customers. We can reach customers much faster. And the plant is completely automated, so the cost of production is lower. So we can able to compete any company there and able to offer a good price, value for money to the clients, and can serve better. Uganda is one of the near market from us, which we have been serving them. So it's helping us to serve Rwanda, Uganda from there. So, I mean, the return on investment has been extremely well on the plants, and we can see we are able to gain more market in Nyanza because of the strategic decisions which we have taken, and the plant quality of products being produced at the factory. Yeah.
And talk to us about issues to do with the challenges you're facing in the business, from taxation to also matters to do with counterfeit.
Taxations are like, I'm just one of the ideas which has come to me that if you would like to create growth in Kenyan economy, and we all know the Kenyans are looking for a house, and there's a huge shortage of the house for each Kenyans. Like we just talk about 2 years, like if government decide to drop a VAT from 16 to 10, and a bank can drop interest from 14 to 10% on low housing. Of course, the governance has to be done. I believe that the construction can grow by 25, 27, 30% in this country. So I think some of the area which country needed, we need some relaxations from the governments. If they can do it, they can initiate this process. I hope that we can boom these countries at 3 times, because that is, and this is required. We need to provide shelters to the people. Cash flow was probably, I said, it's been always been, every company has been facing, the market is slow on payment, and I hope that maybe the coming years, government release the funds, and maybe the cycle will be the better from the customer ends. We have a challenge and some challenge in counterfeit, but somehow we have started a new schemes where we are putting particular scratch cards in our each teens, so that each teens can able to verify it's a genuine products. And we have a full call centers and infrastructures to verify each and every tin we manufacture to make sure that is genuine. So we have been working on that, but this is one of the challenges which we need government to intervene and to come with a very solid, guideline and punishment. The way the plastic bag was imposed, I think is a great initiative to make this country green. If certain initiative has to be took with a very tough decisions, I hope that we can improve qualities, we can serve customers better with the genuine qualities here.
All right, and your parting shot, Rakesh, which areas do you see growth coming in 2018 across the region?
I think for us, across, I mean, if you say Rift Valley areas, Nyanza, that's one of the most highest growth area for us. We accepting good growth in central regions because we just open a depot there, and we see the response from the customers. Earlier there was a challenge in distributions, in doing well. And list not list, but Nairobi has always been a big market for each and every companies, and a lot of projects are coming up. We can see that the huge investment and huge big projects are coming. And I hope that we will grow across. I mean, there's nothing like that. But one areas we are getting growth. We have been getting growth across all the places in Kenya.
All right.
Yeah.
Wish you the very best.
Thank you so much.
Thank you
nice
so much.
Nice talking to you.
Pleasure hosting you on the Trading Bell.
Yes.
And that is Rakesh Rao, the Chief Executive Officer for Crown Paints, just talking to us about the investment landscape in Kenya. And he's quite optimistic that this year holds a lot, especially for paint manufacturers in East Africa. Well, on that note, that's where we transition to financial analysis for this week. What is happening in the banking stocks? Is it the rate cap effect, or is it a question of tightening of liquidity?
Well, you're correct. The rate cap effect, you'll see assets will have grown on their books across the board, and that indicates there's more government securities rather than lending.
This is KTN News. Welcome to Blaze Be Your Own Boss. Halfway through Season 2, we present to you the BYOB Grit Edition Mid-Season Special. Find out more about our 12 contestants who have lit up your screens over the past 7 weeks. Get the inside scoop on what has happened with the 6 contestants who have been evicted so far. And find out what the final 6 are planning to do to get into the grand finale.
Being top 6, I really feel proud of myself.
I am honored to be part of the 6.
All this and much more on the next episode of Blaze Be Your Own Boss. This Monday, 8 p.m., exclusive to KTN.
Well, that is the sound that signifies the close of trading for the markets, and it's time for the financial market analysis. And today we are hosting the Business Development Manager at NIC Securities, Sam Gishohi. Many thanks for joining us this afternoon.
Thanks for having me.
Well, it has been an interesting week for the markets. We've seen the NSE 20 share index going up by about 2.33%, and it's crossed from 3,700 to about 3,800. What do you make of this sudden rally in the markets?
Well, it's still marginal. However, if you look towards the activity on the market, you're going to see a definite shift on the main gainers from the smaller, lower capitalized companies into now the larger caps, which will be on the NSE 20. Safaricom, KCB, I think NIC is there. And
yes.
So what you'll realize is that now with the results season coming in, there's a lot more happening now in terms of the mainstream companies. You'll see volumes have gone up, and that will definitely drive the market upward. I think we're also seeing a lot of fund managers are back in the market. Foreign investors are also trading heavily. It's not necessarily a net buying. It's both ways. There's those who are taking profit. There's those who are buying into the results season. So generally, the market has just become more vibrant, which is a good thing.
All right. Yes. And Sam, linked to this, we're seeing some interesting moves on the top movers for this week. For instance, I'm seeing Safaricom moving 13.47 million shares. We're also seeing Equity Group moving about 9.62, and we do know that Equity Bank has released some of their results. Perhaps, what do you make of this?
Well, I think investors have been waiting for the results season. And if you look at what happened last year, you'll notice that the market began to become much more vibrant it happens in January once the results season begins, because that triggers interest. 2 shillings dividend coming from equity, 2 shilling dividend coming from KCB for a total of 3 shillings. NIC giving a bonus share of 1 for 5, and a dividend as well. So all these will, our market being very dividend focused, will of course cause investors to want to start to buy in and to target those dividends. I think the other thing that we've realized is that in as much as we've seen some drops and some increases in profits, it's mainly been flat for the banking sector. Safaricom books close, the Safaricom year end is 31st of March, sorry. So that means that now people are taking positions in expectation of their results. So again, we've seen Safaricom rally, and that has really driven that stock.
And you bring up an interesting narrative around the banking sector. We've seen flat growth from KCB, Equity Bank, NIC, profits down 9%, Cooperative Bank, same scenario. Perhaps what is happening in the banking stocks? Is it the rate cap effect, or is it a question of tightening of liquidity?
Well, you're correct. The rate cap effect, you'll see assets will have grown on their books, across the board, and that indicates there's more government securities rather than lending. Of course, the rate cap effect has been there. However, on the market, there's more interest in the banks because there's more speculation, because we did hear that there's an expectation of a review of the rate cap law, and that in itself was one of the causes of the downward shift in the banking stocks on the market. And markets move on information. So now people are thinking if there will be a review of that rate cap law and banks will go back, to lending heavily to the private sector, then that in itself will drive their profits, and that will cause the share prices also to grow on the market. So now you're seeing a lot of people taking positions in the hope that information coming out will affect the banks positively.
All right.
Yes.
And still staying with the markets, really. I'm taking a look at the top losers for this week. We have Kenya Airways. The stock is down 12.93%. Flametree Group down 12.37%. Longhorn Publishers 6.73%. Let's talk about Kenya Airways. Well, they reported a drop in not even profits. There was a loss that they reported, which was 6.1 billion. Well, compare this to 2 years ago, they are reporting a net loss of 26 billion. Is the airline out of the turbulence?
Out of the woods, I'm not really sure. Of course, that is a matter of time. We have to watch that. Airlines tend to be affected a lot by external factors, not necessarily just managerial factors. They're very expensive to run. Any issues with oil prices, any issues with exchange rates will affect them. Any issues with security will affect them. So again, airlines can be a very difficult area to run and to call. That said, I think that the decline in losses is good, is a good sign. However, I still think we still feel that it's still on the higher side in terms of market share price value, and we do hope that that share price value will be that the decline in losses and a returning to profit will actually bring out a sort of positive valuation, which then will be good for Kenya Airways.
And still on Kenya Airways, Sam, of course, we've heard from the chairman, Michael Joseph. We've also heard from the CEO, that is Sebastian Mikosh. They're quite optimistic, saying that they're starting direct flights to United States of America. This will have a big influence, really, on the travel between the two countries. They're also betting big on fuel hedging. And, of course, we've seen a lot of government support as well when it comes to parastatals and government ministries flying on Kenya Airways. So, to cut to the chase, is it the best time to buy KQ, or is it not? If you look at a few years back, the stock was valued at over 90 shillings. Right now, it's valued at 10 shillings. a substantial drop?
Well, I still think it's overvalued in terms of our valuations. Remember, they did a restructuring recently, and of course there was a reverse split, or really a consolidation of the shares, where every they divided the shares. You know, now if you had 1,000 shares, you have now 250 shares, which means they reduced the number of shares, and so that in itself, and our valuations are still showing us that KQ has not yet come to the level of valuation it is on the market.
All right.
So then that will need to be justified by profits or their earnings coming back into the positive side, which then will help the valuations. However, the developments, you know, flights to the US are good. I believe it's a good thing. It's one of the few airlines that are allowed to do that. And all these, you know, new developments are good for the airline in terms of even image. So we do hope that they will be good for the carrier. We don't want to lose our national carrier anyway.
Well, let's see how the airline navigates its way to fly back into positive trajectory.
Yes.
Well, many thanks there, Sam. And indeed, a lot happening in the markets this week. For now, we want to take a look at Markets 101. Well, it's time for my favorite segment, and that's where you get to learn a few terminologies. Today, someone is asking us from the streets. Let's take a listen in on that.
I'd like to know what are hedge funds, and can individuals invest in hedge funds?
Well, a hedge fund is a fund. So that means this is a pooled fund, and that means it's similar to a mutual fund, which we see a lot more in our local market. And the way a hedge fund works is that you find that it is created where investors put their money in a pool, and then there's a fund manager who will invest on behalf of the investors to try and maximize on profit and reduce the risk that they get. So what you find is that a hedge fund will invest in various asset classes so that they can reduce the risk. They can, you know, go long or short on an investment depending on whether they expect the market to go up or down, and that way minimize the risk to investors. Locally, you would find that a lot of insurance companies do have mutual funds or pooled funds which you can invest in, and usually because of the fact that these are pooled funds, you do find that they also help to minimize risk because then they are able to invest in a diversified portfolio. Thank you.
Thank you for that answer, Sam. We do hope that that tough question has been answered satisfactorily, and indeed it shows a lot of growth on our viewers on the kind of questions you continue to ask. Well, it's time to take a look at our historical fact for this week. Well, it's a wrap from us here at the NSE, where we bring the show to a close. We do hope that you've learned a lot from the conversations we've had on the program. Well, remember you can engage with us on our social media platforms, as you can see at the bottom of your screen, and you can tweet me at Agina Abi.